Today we're going to talk about San Diego's housing market update for November 2024. Today's San Diego's housing market, everyone seems to have a different take. Let's focus on three trends finding the current real estate market as we close out 2024. Mortgage rate sensitivity. Demand hinges on rates dropping below 6.5. The San Diego housing market in 2024 has been incredibly rate sensitive. Rates above 7% throughout most of the year limited buyers' affordability and discouraged homeowners from selling, keeping demand on par with 2023 levels. But in mid-September, we saw a brief dip below 6.5, which spurred up a slight uptick in demand. Pending sales rose by 6% in just 1 month, and market times decreased from 84 to 80 days, highlighting, however, even a modest rate drop can spark market movement. In October, mortgage rates began to climb again, reaching 7.03 due to the stronger than expected economic indicators like job growth and retail sales. And this reversal has kept the market in check, though. If we see rates dip below 6.5 again for a sustained period, expect an immediate demand on boost, quicker sales, and an influx of new listings. Delayed inventory for 2024. Historically, San Diego's inventory peaks between July and August, and then it drops as the year winds down. But in 2024, the inventory climb stretched into October, with active listings growing 14% since July 4th. Late October, inventory sat at 4,844, and it was expected to peak around early November, similar to last year's November 9th peak. Why the shift? High mortgage rates are partly to blame, slowing down the demand and allowing more homes to accumulate on the market. But as holidays approach, inventory should start dropping as fewer listings come online, and frankly, some sellers want to enjoy their holiday, so they tend to take the listings off the market. By January 2025, inventory is likely to look very similar to early 2023 levels, meaning we may start the year with around 2,900 homes on the market. A more buyer-friendly market as 2024 wraps up, the market is becoming more favorable to buyers. Back in March, homes were flying off the market with multiple offers and only 44 days expected market time. But today, that market time has ballooned to 82 days, a significant change. Now, when I talk about these numbers, I'm speaking of San Diego County in general. These numbers do look different depending on what neighborhood of San Diego you're looking into. In general, San Diego inventory has grown by 76% since March, and the demand has softened by 7%, making conditions more conducive for negotiations. About 35% of current listings have dropped their asking prices, with the average reduction 4.35%. For example, a $1 million home reduced to $956,500. Additionally, more sellers who were priced a bit too high going on the market have decided to take their homes off the market altogether due to the lack of interest, up by 106% year over year. This shift towards a buyer's market creates more opportunities for negotiations, especially on homes that have been sitting for longer periods of time. For a buyer, it's a chance to explore more options and potentially secure favorable terms from sellers motivated to close before the year end. Active listings and expected market time. Well, as the latest data, San Diego's active listings are at their highest for 2024 with 4,844 homes compared to last year. That's a 59% increase, showing just how different the landscape is in 2024. Demand is also down 2% in the recent weeks, with expected market time slightly rising from 80 to 82 days. While this time last year was quicker, 62 days, we're still not seeing the pre-COVID levels of inventory or speed, which averaged about 75 days. However, again, this all depends on the neighborhood and strategic marketing and pricing. We just had 17 offers on a home that we were hired to market and sell in Lemon Grove in San Diego. And we had 16 offers on a home in North Park in the Morley Field area. They also went under contract in 6 days. What to watch next? The luxury market and economic indicators. The luxury market, homes over, let's say 2 million, they've also slowed recently with the higher expected market time due to the lower demand. Inventory is up 33% compared to last year, while demand in this segment has dropped 15% in recent weeks. For the broader market, keep an eye on economic reports like jobs data and inflation indicators, as they likely drive mortgage rate movements through the end of the year. A big factor will be whether rates stay below 6.5 long enough to make a real difference in buyer demand. Bottom line, with inventory up, demand softening, and market times growing, buyers have more leverage than they did earlier in the year. For sellers, setting realistic expectations based on these trends is key to a successful sale. Don't let those sensational headlines guide your decisions. Look at the data to gauge where the market's really headed as we move into 2025. And as always, if you have any real estate related questions about the market here in San Diego, feel free to call or email me at the McT Real Estate Group. Thank you so much.